Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker in Bathurst. Today's video is your fixed rate expiring in 2023 and what does that mean and what can you do about it? We find ourselves in a really interesting predicament moving into 2023. Now normally within the market, out of all the home loans, residential home loans written, normally around 10 to 15% of those are fixed rates. In 2020-2021 financial year, this skyrocketed to 40%, okay? So what that essentially means is when people fix a loan, and they generally do it for 1, 2, 3, all the way up to sort of 5 years. So now that we're getting to 2023, we know a massive portion of these fixed rates are going to turn over into variable rates. So they're estimating anywhere from up to 30% of all the mortgages in Australia at the moment are actually fixed. So a massive amount are going to be coming out of fixed rates in 2023. Now with the rising in interest rates that we've had over the last sort of 6-8 months, that means that people are going to go from a very low rate all the way to the current rates, which are a lot higher than what they were fixed in. So you could be going from a fixing in at 2%, somewhere around there, and now coming out and automatically being on a variable rate mortgage at 5% to 6%, which is going to be a massive shock for a lot of people. On a $500,000 loan, if you were at 2% and then automatically overnight went to say 6%, that would be an $1,100 difference in your monthly mortgage repayment, just like that. So it's so important that we understand what this means, how it's going to affect us, and what we can do about it. So the first thing I'm going to tell you guys is to really understand when your fixed rate is due to expire. Now that could be in January, that could be in August, but by understanding exactly when that fixed rate is going to come out, it gives us a lot of time to create a strategy and plan for it. If you know what you're going, so for example, if you know when your fixed rate is going to come out and what your repayments are going to, it's so important to start making those adjustments within your budget now. And I understand it's hard leading into Christmas, but understanding what gap you need to make up in your mortgage repayments, it's really important to start making those adjustments now, so when you do come out of that fixed rate, you're in a lot better position because you understand you've got that little bit of room to move. You've already sort of made those sort of tougher decisions and probably cleaned up a few things to make sure that you can afford that loan ongoing. So making those adjustments early can really mitigate your risk and make sure that your household has that enough room to move. The last thing we want to do is create a plan early. Okay, now this could be, once again, for us to sit down and say, okay, well, your current repayments are, $1,800 a month. Now they're going to $3,000 a month. At least by sitting down with someone and like a mortgage broker and understanding what your repayments could be going to, we can then create a plan based on that. Now that plan could be sitting down and going, okay, well, let's have a look when that comes out, let's try to renegotiate with that bank. What are the fixed rates going to, what could the fixed rates be? Could I refix a portion of that? Could I do a split loan, to have, a certain portion in fixed, a certain portion in variable? Another thing, and it's a very interesting thing that we're going to come to market, is a lot of people the plan might be to actually break out of your fixed rate early and go to that higher rate as soon as possible. If we know that you're going to be coming out on an interest rate of say 6%, it might be beneficial for you because your borrowing capacity goes down. It might be beneficial for you to break that fixed rate now, refinance your loan to make sure that you have enough borrowing capacity to get a lower rate. It's an uncommon way of thinking, but these are the strategies we're going to have to make because there's such a difference in the market at the moment. All I wanted this video is really just around food for thought, understanding what's going to happen in 2023. We don't have a crystal ball in regards to interest rates, but by sitting down and speaking with a professional, we'll be able to create a plan to make sure you guys don't have any hardship within your household. You can continue to make the repayments, but most of all, you have confidence because you have a plan on how to attack it. So that's what we do here. We're more than happy to sit down with you, understand where you are currently, and see what we can do to make sure that you're going to have a stress-free 2023. If you have any questions, please don't hesitate to give me a call. I'm more than happy to sit down and help you guys through this. Thank you.